I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. Let's look back at what happened in the financial markets in the past week and look forward at what might happen in coming weeks. Hopefully, lots of great ideas and opportunities for you throughout this show. Well, the stock market moved moderately lower last week as investors focused on the political wranglings over combating the pandemic, with vaccine mandates now in place, which there is huge fighting over. The Fed members holding stock and what that means to the coming Fed and whether or not there's going to be some liquidation there. A looming government shutdown as a result of the debt ceiling and the government running out of money, and a growing chatter about the incredibly high stock market valuations, with many articles and many pretty high-profile people now commenting about that. Taper talk is subsiding a bit as the economy appears to be slowing. But Superdove, MMT proponent, head of the ECB, Christine Lagarde, she's trying to be credible, and at their meeting they came out and they recognized that inflation is surging, and she says that they will slow down the pace of asset purchases. It's their PEP program, PEPP, with no indication of how much or when. They just say it would be moderate, and they're keeping their interest rate policy the same, which is a very negative yield curve, really absolutely insane. Well, she's very much in line with Janet Yellen. They're like MMT sisters, and the fact that they're running two of the biggest economies, or partially running two of the biggest economies in the world, in my opinion, is a pretty sad thing. Yellen says the U.S. is on track to default on October 1st, and what we've always gotten was some temporary kicking of the can down the road, and the Republicans are saying no way will they help the Democrats finance their ridiculous spending, which the programs coming up are over $4 trillion. So there's a looming battle and maybe some panic coming out pretty soon, maybe even in the next couple of weeks. Investors could get pretty nervous about that. Well, a lot of you know my opinion. I say bring back this talk of the balanced budget amendment. Let's elect some people that have some sense around, well, sensible governance. Maybe they should be getting nervous now about this transitory inflation, which is raging. PPI came out at 0.7%. That was maybe 0.1% higher than expected for the month. Year over year, that's 8.3%. That's the biggest increase in 21 years. The Fed looks at the CPE, which year over year was at 3.6%, much smaller number, because they want to factor out those things that actually we do have to pay for, that if they did expose that, well, they might actually have to change their policy, but this allows them to be out of their minds. The market at first didn't really care about that here on Friday. S&Ps were up about 20 points early in an attempted rebound. However, they gave that up and moved to the downside. Here at midday, they're down about 10 points. So while the market ignored that for a bit, then all of a sudden they began thinking about it. While companies have been passing on some of those costs to the consumer, and we've seen the consumer prices going up also, they won't be able to raise it enough, and this will affect the margins. And maybe worse, while the central banks are reluctant to raise rates, our analysis shows that the markets are about to do it on their own. Historically, the Treasury market leads the Fed, and I'll show you in just a few minutes a special look at our level 4 charts on the Treasuries. I'm going to show you cycle analysis and 4 different charts on the 10-year yields and also the 10-year futures, and I think you're going to find that very interesting. So like I'm saying, it may be not only that costs are going up and affecting everybody and will affect margins, but I think that the interest rate market is about to take a leg to the upside, futures to the downside, and I'm going to show you that coming up. If rates do go up, investors may not like it. Traditionally, rates go up when stocks go up, but this is not the traditional world. Traditionally, they used to talk about the rule 3 steps and a stumble. In other words, the stock market would continue to go up until there were 3 increases in interest rates. Well, it's not going to happen in this world. In this world, the stock market will move down before you see 3 increases in interest rates, well before that, because there's nothing traditional about this economy or this market. And with present valuations, well, if you look at the Wilshire 5000 and the Buffett indicator, that's 208% of GDP. Of course, we've been mentioning that since it was around 187% of GDP, and the market has kept going up. Sure, maybe you can go to 220% of GDP. Who knows? Truth is, though, it is unbelievably overpriced. And when you look at situations like the potential for interest rate increases, then there could be a sharply negative reaction to interest rates going up. Today's a day, an example of that, where the 30-year bond market is down a full point, interest rates ticking up pretty good right now, and the stock market doesn't like that. And their sellers came in as the interest rates began to increase. We've also seen that negatively affecting the metals markets, and we're going to talk more about metals in this show also. So while our intermediate analysis has been recently challenging, our overall longer-term analysis, well, that has not changed. We have talked about the fact that we believed that in 2021 we would see the peak of this market and a bear market begin. While that might be just a little bit later in the year than we expected, we still think 22 is a bear market year. For the week here at midday, the stock market down between 0.5% and just over 2%. The Russell is the weakest, depending on which index you look at, but it has, overall a pretty moderate down week. The bond market, the 30s are about not far from unchanged. Maybe they're down about 8 ticks right now. 10-year yields up a couple of basis points, so not any big change in the bond market this week. Some good chop action in there, but like I said, I'm going to show you more about the bond market in a few minutes. The gold market moving down, it hit resistance, the area that we thought it would reverse from and then move back to the downside. We thought that would be in the area of 1835, 1840. That was pretty much exactly on, and it has reversed, now down about $35 on the week. The silver market, a bigger hit, over 3%. Down about 80 cents on the week, and Arvi is going to give you a little peek at our stock sectors video coming up. He does a great job on that, so you're going to see a couple silver stocks that we're going to show you. And I just have to mention Bitcoin at this time, because Bitcoin for the week is down about $5,000. It's actually about $8,000 off of its peak. It's a couple thousand off of its low, but it had a massive swing in there. It was getting bought on this news that El Salvador is going to make it legal tender there, but the possibility of that actually happening and in any significant way of adoption happening, I mean, people are in the streets. 58% of the people there don't even have internet. It is one of the biggest absurdities you ever saw. And if you look at the NFT market, and which is basically built on Ethereum fell very sharply also at the same time. Dogecoin had a 30% drop. This is all stuff that's built on fantasy. So Bitcoin down 5,000 on the week. We thought it would come down in here into the close to 40,000 area, try to rally again, and then devastation out there, I think, in the whole crypto market. So we're going to bring you a lot about that going forward. Right now, we'll just be looking for it to hit supports down around 41,000 and maybe a little bit lower, and then try to bounce again. We have a long-term perspective in there that is pretty dire. For the dollar, that actually gains on the week. It puts on about 4 to 0.5%. As part of it is on the euro. Now remember, the euro and the dollar are inversely correlated by about 57%. The euro is that weighting in the dollar index, and the euro moves down in disappointment about what they thought was going to be a very clear discussion by Christine Lagarde on what the taper would look like. It's really nothing at all. They're just a bunch of smokescreen, and there isn't really a taper there. So I would say that that's why the dollar is up this week as the euro moves down. We have a perspective in the dollar that RV is going to share with you if you're a level 2, 3, or 4 member in the full stock sectors video that I think you'll find very interesting on the silver and dollar market. The oil market gains about 45 cents on the week. We think it's going to move down in here by a little bit over these next couple weeks and then be set up for another move to the upside. So overall, I think the oil market may be setting up for an opportunity in here, and that would be finding the right spot for a long side trade. Coming up, we're going to show you this preview in stock sectors. Arvi does a great job talking about the silver stocks. And then I'm going to bring you a picture on interest rates that I think is you're going to find very interesting as I bring you our level 4 charts for advanced traders. I think that you will look at that and say, wow, there's some great analysis there. And then I'm going to bring you a short-term view of the stock market, looking at the cycle patterns and key levels in the market. So that's everything I'm going to bring you in this opening. I want to remind you to please go to the askSlim.com site, explore it. If you're new, please become a free member. You can do that there. And we have some specials that I'll tell you about in just a few minutes. Watching this on YouTube, please do subscribe to the channel. Click on the notification bell so that you know when we put up one of our many videos each week, and give this a thumbs up, like this video, and on Twitter, follow us at askSlim.com. For membership info, questions you have on our huge offerings of education and analysis, you can write to Matt at askSlim.com. For those of you that want to get a taste of what we do, this is a great special. It's basically half price. You're going to get our level 1 membership, which will give you a good introduction to our services, education, and analysis. You'll get our Slimulator Momentum Tracker, which is really good for longer term position traders with our proprietary momentum indicators in there. You'll love that. There's 22 different canned groups in there. Fantastic information. Stock Index Report Weekly, Spider ETF Weekly, all that technical analysis and all of our charts. We have a new trader workbench on there, which has really been evolving. Great way to organize, prioritize, save, and track your own analysis. You'll get the Market Week Show archive. You can go back and review all of the things that we say here, and you'll get our replays on our askSlim Live, which is just great information. And you'll be invited to some of those live events also. And we do a ton of teaching in there, and you'll be able to actually watch the one that we put up with about trader coaching. Great stuff in there that you're going to be it will really change the way you do some things. And some special member videos. All of that, well, it's regular $19.95 a month, but you can have that for a special price of $30 for 3 months. That's $10 a month only. For everything I just said to you, really give you a good taste of what we do. So please do go and subscribe right there. Right now, we're going to bring you a preview. Arvi does just an amazing job. Arvi is an expert in cycle analysis. You will see that when you watch this. Every other week, he presents stock sectors to our membership. And this week, he's bringing silver stocks. There's some opportunities in there that are really interesting. If you become level 2, 3, or 4, you'll be able to see the full video. And that will then give you a great sense for the analysis on the dollar, how that's inversely correlated to silver, and 9 different silver stocks. Here's just a little taste as he looks at EXK and HL. These are 2 very interesting silver stocks, and you'll get a sense for this great analysis.
Okay, this is the weekly cycle chart for Endeavour Silver, symbol EXK. We have a dominant weekly cycle here, which is broken up into these minor half cycles that you see on this chart. And these cycles really have been quite clear. You can see the rising phase here, and then the corrective phase there, the rising phase and corrective phase, the rising phase that broke through the prior weekly cycle high, which is a positive situation, and then the corrective phase here that formed a higher low relative to the prior low, which is now a positive cycle. Once you have a positive cycle, you would look for new swing highs in that next cycle, which is what we got here in this rising phase. And now we've had a very sharp corrective phase right here to complete this dominant cycle. Now at this point, you can see we have a small upturn here in this weekly momentum, which is a positive thing, and it does indicate that we are likely in this rising phase here on the weekly time frame. And with EXK trading 467, we are looking for some more upside here up to this intermediate resistance zone from 544 up to 589. So overall, still a decent percentage-based move likely here in EXK. So this is Hecla Mining, and what you see here is that we have one single key cycle really in play here, and that is a very clear money flow pattern that we're looking at. You can see the rising phase and corrective phase very, very clearly, and I'm just going to outline them for you right here. Now what's going on is that we are due to form a bottom and get into this next rising phase. We have a small upturn here in the weekly momentum as well. Given the fact that we just tested this intermediate 78.6, we are just looking for a move to this intermediate 38.2 to the intermediate term 50. So that comes in around $7 up to around $7.47 or so. And that's with Hecla trading 608. So still overall a decent percentage-based move is possible here as well in Hecla Mining.
That was fantastic work, RV. Thanks very much for that. Just want you to look at, if you're a level 2, 3, or 4 member and you haven't watched that video, please do, because there's some great analysis in there where you'll see these 9 silver stocks that he looks at offer a trading opportunity, as he illustrated right there, but maybe not an investment. And I think that's really important as he looks at the bigger picture of silver and also the dollar and how that relates. So you're going to want to see that whole video. RV just a great job and incredibly skilled analyst in our specific style, which is cycle analysis. So just absolutely great work on that. All right, so we're going to move forward in here. We're going to show you the stock market analysis, but don't go away. First, I have something I think really important to show you, especially for our members that are thinking about stepping up to higher levels and people that really love technical analysis. I think you're going to just love what we're going to show you. This is our level 4 special trial. This is for first-time subscribers and upgrades. What level 4 gets, and this is really an advanced level, is our annotated charts. That's our entire focused list live on your Thinkorswim platform. If you are not a Thinkorswim member, you can go to our site and you can open an account there, and then that would be great because we get credit for that. So Thinkorswim, TD Ameritrade is our preferred broker, and we'd love you to open up an account there to get our annotated charts. This is all of our analysis. On top of that, you get our proprietary studies, our option bias indicator, the market condition indicator, and you're going to get the grids that we have with 4 different time frames with our indicators on there. It's just incredible. You will also get the archive with all of our grids, with our trade ideas that include the Slim Ribbon PO, the Reversal Scout. Nobody else has these. These are our proprietary indicators that keep you on the right side of the market and give you an understanding of the market that it's really hard to get with any other combination of studies. You will love this. You'll get our free live events, webinars, trade planning services, best practices for utilizing askSlim custom charts and studies. And you'll get our full membership access to everything in level 3, 2, and 1. There is too much for me to tell you about. There, you can go to the website and see everything that is included. This is a special 3-month trial. Level 4, 35% off for quarterly. That are normally we're at $159 a month, but you can have it for $101.25 a month for signing up for 3 months for level 4. All of this, these live charts, absolutely great. And there is one more thing that's really important. Our level 4 plus is a little bit different. This is, again, for first-time subs and upgrades, and we only have 10 spots available. Last time we did this, you have to get on a waiting list, and we had a huge waiting list, and we filled up in a couple of days. So we now have gotten better at it. We have these spots that have opened up, and we are going to take 10 more people. So what you get are custom chart requests. Everything that we showed you in level 4, you get, but you'll be able to ask us for our cycle analysis on any 2 symbols per week of your choice. You'll get the askSlim daily and weekly charts to open up on your thinkorswim platform, and you'll be able to see these specific symbols that you have interested in that we have provided to you, that has our cycle analysis, timing, key levels, projections, all of that. And you get access to the full archive of all the requests of all of the level 4 plus members. So we get tons of those every day, and we post them and we share that analysis. It is one of the greatest resources of analysis that you will ever see. There's like 5 or 10 new ones up there a day. It's just crazy how much information this is. And you get our exclusive trader support from the askSlim analytical team. That's Matt, Harvey, and I. We have, I have 47 years of experience in this. These other 2 guys are incredibly skilled. You can ask general questions around trading issues, trade planning, and chart analysis. And you get the full access to everything in level 4, 3, 2, and 1. This is normally $239 a month because you're getting our one-on-one help, and that's why we have to limit it to the number of people that we take, and we only have these 10 spots available now. So that the special price on that now is $465. That's only $155 a month. Imagine paying an analyst, somebody who you had that type of access to. With our experience, you could never get it for this price. So it's you can only use this special one time. $465 for 3 months, $155 a month is what that comes out to. You must reserve your spot because it's going to be first come, first serve, and I'm telling you it's going to fill up quickly. So write to Matt at askSlim.com. If you're not a TOS user, you don't have a TDA Ameritrade account, then please do open one up through our site. Just a little example right over here. This is what a custom chart looks like. Somebody requested that, so this just recently got posted up on our site for the level 4 plus members. This is on target. You get the weekly analysis, and you can see the dominant cycle, the minor cycles, the important support areas. We talk about the configuration of the cycles, projections, the momentum indicator that's in there, and you can see in here in target, this is pointing to a correction coming in the next month. But this is a bullish pattern and then likely moving up again. Here you could see on the minor cycle on the daily, momentum has turned negative. The slim ribbon PO giving negative signals. So negative momentum here, likely decline over here in target. And this point shows you where the next date is, where there's an alignment between the daily chart and the weekly chart. Nested area right over there. This goes out here another 3-4 weeks. And that will likely be a point where you could start looking at the support zone and where to buy it. This is a just unbelievably great way for you to get a feel for stocks that you probably will have never had before, and ETFs and futures. We do it all. We look at 24 plus different futures contracts and market indexes, plus well over 400 stocks. Plus, we'll bring in anyone that you ask us for that we can do this kind of analysis. So this is that great example of that. Please do go to askSlim.com, get yourself on this waiting list, reserve your spot for this level 4 or level 4 plus, or you could just sign up for level 4 right now. And you won't have the one-on-one custom support from the team, but you'll get everything else also. And again, there's great charts that you see right over there. And I'm going to talk a little bit more about our style of charting in just a moment. All right, U.S. interest rates, level 4 charts. So I just showed you the special that we're running for our level 4 charts, and I want to take it a little bit further because I think this is very important to look at. I said earlier in the show that we see interest rates moving up. That would be the Treasury market futures moving down. The likelihood of that happening, I'm going to show you, I think is quite high for a couple of reasons. The market is the stock market is in my opinion more susceptible to an increase in interest rates than it has been before, and we're seeing signs of that in the stock market and in other markets. As interest rates go up, the stock market has tended to not like that. And an example of that is today on September 10th when interest rates started to move up and the stock market reversed to the downside pretty strongly. So the overall picture that we're going to show you in here, and I'm going to look at a long-term chart also, is a spike into mid-2020 for the interest rate market. And again, we don't really think that the stock market or investors are going to be pleased about that if that does happen. Let's take a look at our level 4 charts. Now, when we share our 84 top traded symbols in our focus list, they come in the form of chart grids where we have multiple time frames and different charts on there. The futures and index charts have more on there even than we have on the symbols of the stocks and ETFs. Here is what a grid looks like in here, and I know this is messy. This has right now analysis on the ZNs, the TLTs, the ZBs, and the TNX, the 10-year. And there are 4 different charts in each one of those. When I blow this up, you're going to see that it's very clear and you can see it. And then there's an arrow that you can move through it very easily. So I'm going to maximize the sell on 10-year yields. This is TNX, and you can see it very clearly. And there's an arrow up on top that I can just go back and forth, and it advances to the fully expanded chart on each one. So this is the weekly chart on the 10-year yield. And of course, there was a big decline in yields right in here. And then as the market continued to move down into this period in March 20th, that was reflective of the pandemic panic, and interest rates fell very hard as the Fed reacted. And this was a period where we got down to just 39 basis points on the 10-year, which was incredible. These lines, these vertical lines, show you the actual lows, the actual time frame on the cycle bottoms. These are the cycle brackets, which are ideal cycles. In other words, if they were perfectly making the bottom exactly at the right time, then that's where they would show up. And there's a minor cycle and a dominant cycle. Look at how incredibly close the real lows were to the ideal lows. So that creates information for us. On top of that, we get more information by the fact that there's a configuration in here that the low here is much higher than the low here. When you get a big decline in any market and then you base, the probability is high you're getting a reversal. And here you could see we got the reversal upward in interest rates. So this was a positive cycle. That this shows you also a positive cycle. This is called a right-hand translation, where there is almost no declining period right over here. It's also what we call a swamped cycle, because the upward component in here, the directional component, the money flow forces, were so strong it would not allow the correction in here. That's different than this cycle here, which declined as it should. And you could see the declining phases right over here and right over here and right here. This super strong sets up this big rally. And then we get interest rates falling down again. That is in alignment with the Delta variant of slowing down the economy again, and thoughts that, well, there maybe won't be a taper, or the Fed could stay loose for longer. But now we're right here, we're in this rising phase, and you see momentum turning up, and that confirms this bottom. This is the beginning of this rising phase, and what that says to us on an intermediate basis is that interest rates are likely to move up. The resistance levels right over here, this is 1.45%. That's only another point on the upside. This right over here is at about 1.52%. There's 1.63%, and this cycle peak up at 1.76%. So right now we're in this period where this minor cycle might exhibit some little downward force and choppiness in here, but then we think interest rates are going to be spiking up again. Part of this might be a time period right in here where the stock market gets a little sloppy, and interest rates maybe come down as a little safety bid comes in the futures, but we think there's a spike right out over here, and that really could be in alignment with a very big break in the Treasury futures market. So I would say minimum upside projection as we look at it here in coming weeks is this is October right over here, and this would be around the 15 and a quarter, 1.52%, sorry, in that level. That would be a pretty good upside move in interest rates and decline in the bond market. I'll show you that. So now we're going to move to the daily chart right here and look at this phenomenal chart. You have actually what we call out of phase cycles in here. In other words, there's a minor cycle and there is a dominant cycle, and when they nest together, you usually get, some important bottoms like you did right over here. When they're both moving down together like here and here, you got two lows that pretty much hit that expectation. And now you could see what happened was that the trend in interest rates is picking up. Here it looks like just a few days where the interest rates could be a little sloppy, and then another potential uptick. So this could get you right up into that 1.5% that we're talking about right there. So interest rates right now are in a short-term uptrend, as you can see, and the cycle patterns are suggesting that sometime in the next few days, both of these will bottom, and then you're likely to get a move to the upside right in here that could be pretty sharp over the very short term. So we think that there's a buy area in interest rates, or essentially a sell in futures coming up when you look at that. So that's a look at the weekly and at the daily. Now let's look at, before I get into that, I want to show you right down over here is our option bias study. So the option bias study gives you different information in here. When it's down over here and red, very red, it's very negative, and the probabilities are high of getting a decline in the market or continuing to move down. You started to get neutral readings right over here, and now our option bias study is becoming positive for interest rates. It's been there for about the last week, and I think a little correction in here won't change that. So this gives us a sense for, and we developed this for option traders, but it works on everything, a sense that you want to bias your positions for long interest rates or short futures, of course. So now let's look at momentum conditions and the slim ribbon PO. So you could see as interest rates were moving down right in here, what happened was the slim ribbon was configured negatively. And the slim ribbon tends to be support and resistance. As you can see, the slim ribbon PO is your signal indicator, and this was telling you interest rates were falling and continued to fall. Things began to change right over here, And now you're getting positive signals on interest rates on the short term. This is the daily that we're looking at, and this is suggestive of the fact that interest rates are going up. Momentum conditions are supportive of that. So you have it not only here going in the option bias indicator, but you have it here on the momentum condition saying interest rates are going up. Next, or the last thing, is the 2-hour chart, and on here we have our MCI Market Condition indicator. It was negative over here for interest rates, as you could see, but then it began to improve, and it began to test what's called the swing zone. Now, our level 4 members get all of these indicators, and it's now moving up here, but it has to break above the 25 to be positive. In the meantime, you're not getting any great signals right in here, so this is not offering a lot for trading. Now, for short-term traders, we like this chart time frame and these indicators for your directional decisions. Right now, TNX is not giving that to you. So that's a look at the interest rate structure. Now I want to look at the futures as we look at the same type of charts in the ZNs, and those are going to trade opposite to what we see in the interest rate market that I just showed you. And here is the weekly chart in ZN. So what we're looking at here are just fantastic cycle harmonics that you see right in there. You had a big nesting period coming right in here. This was a super strong period for the futures market. It corrected right into here and then rallied, gave you a double top, and then had a breakdown. And this said interest rates were about to increase. And we were all over this when we saw that. You could see our message here, cycle low support. Breakdown confirms a major top is what that says. Let's see if I can blow that up for you a little bit in there. So it broke below the level that confirmed the major top. Here you have this cycle right in here, which is the TLT and the ZBs. And there's a little shorter cycle here that the ZNs were following, but now they're in line with the longer term further out the curve. And here's your support area. What it looks like to us is the next few weeks you're going to get a downward move in the ZNs. That's that upward move that we just talked about in interest rates. Then you get into a period where they're likely to bounce out over here, where interest rates would be falling, and this would be out into maybe November, so late October, November right there. And then here's that huge risky period that takes you out into 2022, way out into potentially mid-year or longer. I'll show you why mid-year in a moment. But this takes you down into January right there. So we think that there is a big decline here in the Treasuries, a big increase in yields, and that coincides with that upward spike that we're looking at in the TNX, or the 10-year yields. Let's advance this now to the daily chart. Look at the head and shoulders top forming in there. This is the resistance level. Now I want you to see cycle analysis is why chart formations form. It's what creates them. Here you can see the left shoulder, head, right shoulder. When you get a rally that comes all the way down and gives almost all of it up in the cycle, it says that you're likely to fail in the resistance area, which you're doing right in here. We've got a little bit of an uptick going on here, but overall what we're looking at is a potential large break out during this time frame. So like I said in the weekly chart, we're about to get a few weeks on the downside. That, if this head and shoulders breaks, so the cycle low support is at 132.23 in the 10-year, it's likely that it's going to move down over here to about 130.5, which is the head and shoulders top measurement. So this is a very weak pattern. This is why a right shoulder forms, as the upward component that was moving it up now becomes a negative component in here and begins to move to the downside. Take a look at momentum, and you can see in here the positive momentum and the slim ribbon PO that was, wow, I showed you the opposite of this in the 10-year yield, pushing up, and you can see all of the powerful signals in here. Then it began to get choppy. It is neutral right now, but can soon turn negative, and that's going to be a key thing when that does turn red. On the 2-hour chart in here, This is a little higher quality than what we saw in the yield chart, which gave you the sell signal right over here on the slim ribbon, gave you the downside confirmations, and here as it continued to move to the downside, and now again is neutral. This is the market condition indicator, and here is now testing the area of the swing zone and still not getting any signal in there. I think it's going to break below there and give you that significant break. Again, let's go back to this chart over here, and you can see the daily chart, and what you're getting here on the I'm just going back so you could see what you're getting over here on the option bias indicator is this negative condition right over here that you can see. What you look over here is that you're neutral, probably leaning to negative any day, and over here you've been trading negative to neutral on the ZNs. Everything I just showed you in here is in alignment with the likelihood of a downward movement in the futures market and an upward movement in the interest rate market. Like I said, our minimum upside for the near term is about 1.52% on the 10-year. That's the patterns project down to about 130.5 on the 10-year future. We have all of this analysis, by the way, on the 20-year, the TLT, and the 30-year on this same chart grid that we have right over here. So if you become a level 4 member, you'll be able to see all of our proprietary indicators on the on everything that we have in here. The 10-year I just showed you, the TLT and the ZB. So in case you trade all of those, you'll get those. So please do become a level 4 member, and you'll see that. That's the my analysis for the short and intermediate term. I want to back that up a little bit right now and pull in a chart right here, which is the TNX. Whoops, where did that go? Let me just try to get it in the right place for you right here. And this is a monthly chart of TNX. Let me get this in place. A little bit challenging right there. So I'm going to move this out to a time frame of max. Okay, we've got that right. And I want to show you this amazing cyclicality that we're looking at here. So what we're looking at is a chart that goes back into 1997. And you see the dominant cycles right over there, the blue ones, and they show you the time, where those bottoms would come. You could see that key bottom came right there, where all three of these cycles in these harmonic families nested. Each time you get into this intermediate nesting period, you get into a rising zone. Each of those rising zones or phases lasted between 6 and 28 months on the upside and moved up at least to the 50% retracement level for yields. So we're in nearly a 40-year bear market in yields, and we have nothing that really shows us that bear market has ended. All we know right now is that yield started to move up, as you could see right in here, and the likelihood of that continuing is very high. Now remember that every single one of those got to the 50% retracement levels or higher. This one did not get there yet. And the probability is when this minor corrective period is over with, it could be right now or it could be over here. I think it's going to be more likely sooner based on all the other analysis. Then right up over here would be about a level of 1.80%, potentially up over here to about 2.17%. So this on the monthly chart says that we're going to see a pretty sharp advance in interest rates still, which has begun and has paused now for the moment. You can actually see right over here it did something similar, paused, and then interest rates exploded. Right up here got a rally, paused, and then interest rates exploded. So that's really what I think is the highest probability here for the longer term. By the way, for those of you that are students of our work, you will see that there is a 22-month cycle, a 44-month cycle that takes up 2 of the minor cycles, and a 66-month cycle that takes up 3 of the minor cycles. It's beautiful harmonics that we have in there, and that upward projection really says expect about 1.8% over coming months, maybe even up to this 2.2% level up over here, and that would take you out into mid-year of 2022 and may coincide with what would be upsetting the stock market as interest rates are moving to the upside. So that's a look at the long term as we continue this examination of interest rates and why I think they're going to be moving up. Again, do become a level 4 member and you could request that monthly chart that I just gave you. So that's it for this special that I'm bringing you on U.S. interest rates, and I think that the information is pretty compelling on these patterns that interest rates are very likely to be moving to the upside. Here is the analysis on the stock market. We're going to look at the short-term analysis. We've been doing that the last couple of weeks, plainly because the information on the intermediate analysis has been challenging. Where a correction was likely to come, we saw corrections come basically under the market, with many of the indexes pulling back significantly, the Dow Jones Transportation Average, the Russell, all getting like 13%, 10%, and some other parts of the market correcting pretty significantly, but the major indexes not showing that. One of the important things when I talk to traders, that especially when they're having challenges, and this is real important for shorter term traders especially, when you're struggling with your analysis, when you are looking at time frames that are giving you ambiguous information, that you don't really know how to handle positions, one of the things that I encourage them to do is to shorten their time frames. The reason for that is because the information they'll get will come to them faster, and that tends to get them more in tune with the market. And the same thing when you do analysis. If you're struggling with your analysis, go to shorter time frames. Really work on those first and see how you could expand that information out. So in the short-term views that we have brought, the stock market has been in an uptrend, and the information's been spectacular. As a matter of fact, if you look at the stock index report that Matt puts out daily and weekly, those have been giving just great up signals of bullishness for actually months. So that has not changed yet. I'm going to bring in this short-term look here. I'm going to move that chart out of the way right there, and then bring in SPX on the daily. Let's blow that up. And you can see the cyclical patterns in here. Remember, if you want to learn cycle analysis, go to our workshop page, which you'll see in the upper navigation on the site, and you can watch a video I put up there. So here is the analysis that we have been showing, and these are called complex cycle structures. And on here is the slim ribbon, which shows you the momentum conditions, and the slim ribbon PO, which is a reflection of that and gives you the indications in here of continuation of momentum conditions. That you can use those as buys right over here, and when it's red, you could use it as sells. It essentially is giving you confirmation of the condition of the market. You can see right over here, we just got a little bullish confirmation right there. The market is actually a little bit weaker. Usually when you get those, it just spikes up, but now you're not really getting that. We're in another one of these yellow zones right over here. Now, we had believed that this period right in here would coincide with a decline on the intermediate, and it would be sharp to the downside. Then when the magnitude of this advance showed up just as all of these has right in here, or have, that would be giving us an indication that this corrective phase is likely to come down into the support areas again and hold. So far that is proving to be the case, as you can see, as the shape of this cycle continues to be what we considered configured bullishly, and translated bullishly. Though you can learn about that in our glossary in our cycle analysis workshop. So the key levels that we're looking at in here are where the support is in those green zones right there, and the bottom of that right over here is 44.35. So it's 44.35, 44.58, and where we got to this morning, 44.77, and then it got a bounce off of there. So this is about, because these cycles are averaging 20 days, this one is actually 23 days. And one thing that is really strange to me, or maybe not so strange, is that all of a sudden, everywhere I look, people are looking at market cycles, and they are all picking up on the fact, maybe from us, maybe on their own, that these cycle lengths have been in this 20-day average, as you can see right in there. And what happens is that when cycles become so consistent that it's practically written out of the textbook, they start to change. I think all of these people that are focused right now on these cycles are not going to know what to do when they change, because they won't understand shifting conditions, and we'll be bringing that to you when it happens. In the meantime, this looks like it has maybe 4 to 6 more days right in here of correction if it were to remain in the ideal lengths in here. Let's just say 3 to 6 more days would be kind of in the ideal lengths, and that would get you down into this support. Underneath the 78.6% at 44.05 would be the first warning that something may be changing. That would not be a bearish, it would be what we call a reevaluation level. While these are all bullish and setting up the same way, if it got under there, the expectation of a new high following would be sharply diminished. It would probably go from 70% or more down to about 40 or 45%. If it got under this level right over here, 43.6773, it would signal the likelihood that the intermediate pattern is turning negative and some very significant top in place. Now, if you get a low in here and it moves up again, all of these numbers are going to get reestablished. The key is where the real cycle lows are that you could see right in there, and these cycles were so strong because of the upward directional components that the magnitude of advance pushed each one far away from the levels that would be threatening. It did it again in this cycle right over here, and that is suggestive of the fact that this uptrend is not over. Now, if you were to come down in here, get support, rally, not make a new high, come down and break this low, that would be a very negative occurrence out in this next cycle. So we learn from the shorter term time frames about the intermediate conditions. While I had been anticipating a larger correction in the stock market, this short-term patterns have never, through all of these months, confirmed that. They have remained in these positive formations, as you see here, and all of those have continued to signal that the market would be making new highs. We still have that condition in place until the market tells you something differently. Right now, we would be looking for the next few days to get into these green zones that I told you about, and then we will be building a new structure pointing to a new high. If it falls harder, we'll be building the structure in a more negative way. If it breaks this low, we'll be projecting a negative pattern coming up ahead, and we'll just be learning from it. And I challenge the other people out there that are becoming cycle analysts to really understand what all of these nuances are, all of these different formations, all of putting in key levels, key indicators that give you a sense of momentum conditions and the directional components that affects the cycle analysis. Right now, well, last week we talked about the fact that the market would likely decline and it would move down into these support levels. Now we're talking about it moving down into mid to late next week and then moving up again. We're going to have to see the depth of the decline and see if this positive structure and positive momentum conditions remain, as you can see on the slim ribbon and the slim ribbon PO and the configurations shown right over here. Stock market correcting a little, 4 down days in a row, and now maybe 5, is something we have not seen. We have not seen 6 down days in a row in I don't think in this whole year, or even back into last year. So if that happened, maybe you'd get a sense of something is changing in here. So that's the S&P 500 down into mid or late next week, and then likely moving again. And let's see what the levels and indicators tell us at that time. That is market week for today. I hope you have found the information absolutely crazy compelling to you, and that you've learned a ton from us. Remember, if you're struggling and challenged, shorten your time frames. I think that's the best thing I can give you for the day, as that will get you to tune into the market, and you will get out of your positions faster when they're not looking correct, and you'll understand that your positions do look right even faster. Also, that will improve your risk reward and your returns. All of that, I think, is maybe one of the best things I can give you today. I want you to be sure to go to our website and explore that. Become a free member, or become a level 1 member. Take advantage of our level 4 special. If you're on YouTube, subscribe to the channel. Click that bell so you get our videos. Like this video, give us a thumbs up. And watch our member videos in the playlists and past shows. You'll get a ton out of there. Follow on Twitter at askSlim. And for information on all of our memberships and our large offerings of education and analysis, please do write to Matt at askSlim.com. I want you to be so incredibly careful. It is so crazy out there. And I'm always wishing you great trading.